Guys, in the last video I posted, I mentioned that I was going to do something on gold, so here it is. I'm going to look at a couple of websites which provide gold prices over a period of time. So this one is gold.co.uk, and currently on the screen you're looking at the chart for the last 3 months, so it's a pretty short time frame. Excuse me. But as you can see, things are not doing an awful lot there. Let's expand that out to a year. See what that looks like. Okay, so over the course of a year, that has done a bit better. You can see up here plus 11.75% on the year. But let's look at 5 years. After all, if you're going to be investing, it should be for the long term. Now on 5 years, that's showing just over 50%. It doesn't sound too bad. What about 10 years? 10 years is just over 40%. What about 15 years? Now 15 years, it's actually showing plus almost 340%. And you'll see why that is shortly. If we look at the 20 year, you'll see that in around 2006 things started to take off, and then from around 2011 it stagnated quite a bit until about 2019, so best part of 10 years there. So 600% on 20 years. Let's just go for 40 years as a next step. Now this is looking interesting. So this takes us back as far as the early 1980s. So if you had bought in 82-83, price went around about 260-270, and if we go as far as 2005, at the point that I'm at there, the value was only 236. Now that did recover by late 2005, but from all the way from the early 80s up to 2005, you were basically looking at gold flatlining. And as I say, then from around 2006 up to about 2011, so a period of about 5 years, you had a significant increase. However, from 2011, so these points here, the value was around about 1,100, and then you would have been in negative territory all the way across here from 2011 until 2019. So what I'm seeing from looking at this graph is that gold seems to surge in times of uncertainty, but then it just appears to stagnate until the next crisis comes along. And as you can see, there's the highest price that seems to have been recorded there was in August 2020. So realistically, that would have been the time to sell, but not the time to buy. And if these other peaks are anything to go by, well, here's the latest one. Are people still saying that it's a good time to buy gold? Because from what I've seen elsewhere on this graph, my belief is that chances are if you buy in now, you'll be buying at too high a price, and it'll most likely stagnate for the next 10 years or so. But let's have a look at something else. Okay, so this website is monex.com, and we're on the gold prices. And as you can see here, it's given a price for the day plus 0.34% for the day. This is set to a 3-month time period at present. Let's have a look at the year to date. So just look at it. Yeah, okay, up a bit, and then down ever since. 1 year, 5 year. 5 year looks a bit more impressive. 10 year. Now, look at this. In, what was that, 2012, October 2012, you would have paid a premium for gold, which you wouldn't have ever seen again until June 2020. So, was that about 8 years? Maybe not 10 years, but around about 8 years. And if you bought at that point, I'm sorry, but you would have been tied in pretty much without any gain right up to that point. Now, what I like about this site is that it allows us to compare. Okay, as you can see, there's various other things along here. So you can compare against the Dow Jones Industrial Average. Let's have a look at that. So gold is the one at the bottom here. The Dow Jones is above, and as you can see, well, the Dow Jones has just completely run away with it over that time frame. Let's take that off, and we'll have a look at the S&P 500, which, as you know, is the one that I'm invested in and that I'm using for the simulation on YouTube. So again, the S&P 500, just over a 10-year period, has performed an awful lot better than the gold price. Just look at the look at the little percentage thing there. With the S&P 500, it's you can see on the scale there, it's up around the 200% mark, as against the gold, which is in I don't know what that would be actually, but would it even be as much as 10%? I'm not sure. Let's take that off. Let's have a look against the FTSE 100. Now the FTSE 100 would not be the best performing index out there, but yet it even beats gold. What if you had put your money into crude oil? There you go. What about if you had just kept your money in US dollars? Okay, there's not really an awful lot to say about that, but it's, do you really think that gold's an investment after seeing that? Why not put your money into companies, into an index fund like the S&P 500, or the top 500 companies, which are refreshed as needed, depending on their performance and so on. They actually produce things. They produce goods. They provide services. They provide value. Why not put your money into something like that, something that's active, as opposed to putting it into gold, which produces nothing else, can be used as a good conductor of electricity and heat and that sort of thing, but I believe that it may even have been surpassed by other materials in the interim, and gold does not provide any dividend, so there's no income to be had from it. Some people have described gold as a store of value. Well, yes, that may be, but if you want to store value, I suppose you may protect it from inflation slightly by using gold, but again, would it not be better invested somewhere where you're going to see some growth? Guys, that's pretty much it. I just wanted to make this to challenge the notion that gold is a good investment. I've heard it spouted several times in the past couple of years, particularly by people in the movement against the COVID restrictions, which I count myself as part of, but I think it's bad advice. Don't put your money into gold, put it into something that is going to give you a good return on your investment. And as always, if you are unsure, you should seek professional advice and not listen to some guy on YouTube. Thanks, guys. Have a great end to your day.